Hello, and welcome to another day of TA the Degen way. And yes, I did change that intro from the old way to the Degen way, and I find it more fitting. Today I just wanted to do a simple market update on Bitcoin and the crypto market as a whole. Don't do a whole lot of videos because videos do take a decent amount of time, resource, and effort. But if you find value in this content, I do encourage you to support the effort to get it out there by liking, sharing, subscribing, and better yet, join our free Discord where most days I'm able to do a daily AMA live charting where the same things that are discussed in these videos are going on in a much more casual and open format. The link to that Discord is in the description. But if you like the way that we analyze and view the market, well then support and join us. It's been a week or so since I've done any updates, and I don't see anything very different on the chart. My thoughts and feelings have not changed very much. And I'd just like to go through it real quick and show what I believe to be the rational basis for a strong possibility for more downside. This is a 4-hour chart on the all-time index chart on TradingView. For Bitcoin, here we've got our last major unbroken trend. One could argue that there's still one that is intact right here, which is true. But what have I noticed on the chart to continue to keep me bearish? If we zoom in on the current price action, I don't want to put much focus on the macro, as in our past videos I've put a lot of focus on the macro because I do think it is the most important thing to know your environment. If you were to discover the holy grail of trading, one of the number one things that you would want to accomplish or acquire is to always be directionally correct in your trading, which does come down to the macro direction of the trend, which, like it or lump it, is currently a downtrend. Do we have an intermediate uptrend that we've been dealing with that is a positive thing? Yes, there has been a counter trend to our current macro downtrend, which I do like because you certainly make more money when the price rises than you do when it goes down. The opportunity for profit is far larger in an uptrend, so there should be no joy in downtrending markets. It's just a fact of reality that they occur, and if you want to capitalize on the full potential of the market, well then taking short positions or neutral positions in markets that are downtrending is just the place to be. And currently, we've broken this trend, and thus far, downside has only been a meager 15%. And if we were to consider a retrace of the last high or the swing high and the swing low, how much of this trend that showed clear signs of exhaustion on both momentum, RSIs, price action, and then a break of trend, the swing has obviously ended. So what we're looking at now, if we want to be in the camp of our current price action or our current counter trend to this, is just a retrace coming down for more liquidity to shake out some weak hands in the market, entice new buyers to come in at lower prices, and reach prices that are low enough that sellers just don't feel comfortable selling anymore because they feel the market's going to go up from that price. If we were looking for a retrace on this trend, well, we would take the swing low to the swing high, and we would be looking for reasonable retrace levels on a trend that has exhausted itself broken trend and has now changed trend. Will this be just a short-lived retrace counter trend with continuation to the upside? Well, if you can rebirth Nostradamus and are privy to that information, well then I guess that I would be willing to listen, but I'm of the camp that is unforeseeable and unknowable and not worthy of pursuing. But I do live in the camp of probabilities, and the majority of trends, especially larger time frame macro trends like this, they tend to retrace somewhere from the 1/3 to the 50% to 75% level. And thus far as this trend that has clearly exhausted itself and begun at a minimum a retrace, has retraced exactly 1/3 of the trend. Does this trend have potential to gain support here and continue to the upside? It does. Is there any indications on the chart that that is what we should expect? There are, but I find them to be very few. We can look at the volume of our downward move since we broke this trend. We have a very high volume spike in this capitulation here. We have a retest of our break of trend, and one would expect a continuation to the downside. Our volume is decreasing, and I would like to say it's decreasing as we push down, but in reality it's decreasing as we push sideways. Are we at a known support level? We are. Thus far, we have a double bottom. We have price consolidating right here at this swing low. I'm sure somebody wants to argue it's more than a double bottom. We got 1 hit, 2 hit, 3 hit, 4 hit, 5 hit, 6 hit, 7 hit, 8 hit. Come on, man. This is a swing. This is a swing. This swing has exhausted here. This is a bottom at this price level. This swing is potentially bottoming here, but that's not confirmed yet. It has, at best, stalled here. Now, will it continue to the upside or will it continue to the downside? That is the unknowable part of the matter and just a fact of reality. And we're looking for supportive evidence as to why this price would continue to the upside or continue to the downside. Markets can either trend up, down, or sideways. But what happens when you trend sideways? You have a trend line. Price, the trend exhausts itself. It begins to trend sideways. It breaks that trend, and then, the trend will change and typically break to the upside. But we would have to trend sideways for quite a while here or break out of this. There's always the possibility of price continuing on to newer highs. There are a few arguments I'll get into very shortly here that would be in support of that. There's always the argument to be made that you put in a very large right shoulder for a macro head and shoulders. And there's also the argument that a lot of people just don't like it because everybody wants price to go up. That price continues to work its way to the downside. I'm in the camp that price will most likely continue to the downside, and I find it to be more probable. I find more supportive evidence for a continuation to the downside, and I am reevaluating that load of evidence supportive for or against these three types of directional moves every time we hit a level worthy of analyzing that. Up, sideways, or down. When is it worthy? Well, when price shows some form of exhaustion or loss of momentum in the current trend, which is down. It has moved sideways and may continue down It may continue sideways. It may continue up. And all we can do is look for supportive evidence for what move that we should expect next, properly manage our risk in taking those positions if we so choose. So in the event of when you are wrong, because it will happen, and it may even happen more than 50% of the time, I mean, there are ways to manage your risk to still be profitable over the process of time. So what are we looking at here? Supportive arguments that we might continue to the upside. Are we at a common known retrace level on the swing? Yes, we are. Are we at a past high time frame respected support level? Yes, we are. Is volume increasing to the upside as we start to move up? It is not. It is trending to the downside. Is volume trending up or down on this move as a whole? This trend, this downtrend that we're in, just the local downtrend. I think there is a macro downtrend, but just considering the local downtrend, well, volume has been decreasing on this move. Now, will it pick up and continue to the downside? Well, it sure can. But it is decreasing. Has the trend showed some signs of exhaustion? Well, I'm going to argue yes. I mean, the market is technically macro trending sideways. We had an uptrend. We are now in a sideways trend that is signaling that this uptrend was exhausted, and our next move will be to consolidate sideways, gain open interest in the product, and price goes up, or it goes down. It's just the way it works. So we're looking for these things that, I mean, has this local downtrend stalled out? Well, I mean, momentum or volume, when did this local trend end? Let's take the volume. Let's follow it down to almost nothing. Well, that's when the trend ended. I mean, it ended right, then you got a volume spike to the upside. When did the uptrend end? When the volume started turning back to the downside. Then we had a change of trend. A big volume spike. And now when will this trend end? Well, I mean, when the volume gets down very low. I am expecting some kind of a rally in this time frame right here, because volume is decreasing on the move to the downside. If we look at our momentum oscillator, you can see, I'm just going to pop very quickly out to the weekly. I mean, what do we see here? I mean, we have this oscillation to the downside right here. I mean, it has the potential to roll to the upside. I kind of think that we're going to see some more downside, but I mean, you can arguably put this momentum wave. I mean, momentum came way down. Price is still up here. I mean, that is, a good signal that there's tons and tons of selling, but there's enough interest in the product to keep the price from just power dumping. Doesn't mean it will. Money flow is about to cross the zero line and could break into the green for a big time rally. Or if we are in a bear market, money flow could also approach the zero line, and you get another significant move to the downside, and then a continuation to the upside. And that is the camp that I reside in, is yes, money is coming into the asset. That's what caused this 100% price pump, is the open interest at these prices and with this momentum. Well, this momentum is used up. This price is long gone. Maybe we'll get back there. Maybe we won't. Now we're in this environment where that momentum is used up. New momentum needs to build in the market. New open interest. New money needs to come in. Old money needs to stop selling or be, convinced that they shouldn't be selling. They just need to stop doing it. And when they actually do, well then, the trend will exhaust itself. New open interest comes into the market and it rotates to the upside. So, there is some bullish arguments to be made that the liquidity cycle is prepared to, possibly roll over to the upside. And even if we want to assume that the 4-year cycle is going to play out, this is normal. Money flows right here is where it crosses into the green, right at the tip of the mid-cycle rally. Well, what happened? You got a 75 to 80% retrace of this pump. That is where you are at now. I'm open to price coming down here because of this, because of the fact that momentum, this is the relative strength of buyers, has been decreasing as the price has been going up. I think the crypto bros are some of the most greedy traders on the face of the planet. If they expect that, price, just because of the fundamentals, has to just keep perpetually going. You're up 69 million%. It's 13 years old. The law of diminishing returns is playing out to a T. Is this the forever top? I don't know, but it certainly could be. But like I said in the beginning, I don't want to focus on the macro and the idea that prices can come back down here. It just certainly can. I'm pointing out the fact that very, very soon, as in the next coming days, coming weeks, to maybe few coming months. This is October, in this area, we would expect this wave to pinch off and curl back to the upside. Now, if it just does a little blip here, in price, let's say that we get a quick capitulation, come down hard, while this pinch is off, and then we get a little itty bitty little wave, indicating that there's just not that much money available and that much interest with the little bit of money that is available to push this price up. Well, then, you're going to get this. That's just, what's going to happen. And that's kind of the camp that I'm in. But I'm looking each step of the way. I'm looking for, some signals that are bullish. Well, what is a bullish signal that I see on this chart? One, I see a weekly engulfing candle, at a bottom. I see a weekly engulfing candle at a bottom here too. Price just engulfed the whole swing. And then it crashed and plummeted. Weekly engulfing candle engulfed the whole swing. And price just plummeted. Engulfing candle, it is a good signal. It's a good sign. But on high time frames, not always quite as much. Here's an engulfing candle. And then we dumped 15%. So we're approaching, a known trend line. Our momentum is clearly pinching off. There's a nice little bit of volume in here. It's a little higher than here. It's not higher than this one. But what I'm looking at is the time frame of when I would expect new open interest to come into the market based off of this liquidity cycle. Well, it's in this time period from today, as in right now, at this price level, this price action, price could continue to the upside. So now we need to go down to our shorter time frames, because there's also another option. Price could do a very quick, swift, hard move to the downside, just as it did over here. Price, it reached this top, well, not here, but back here in our last cycle, and we got a trend to the downside with some very hard drops. Here we got a hard drop. Obviously, that's a black swan event. Well, you're facing about 5 potential black swan events already. And you have FTX dumping, there's the Mt. Gox dump, there's the U.S. government, Silk Road dumps. All these things. I don't think that's going to total the market out, but you have these different things that, there's world economic crisis, all kinds of potential black swan events that are equal or greater than the threat posed right here. It talks of lockdowns. You would have to be a fool to say that those things can't occur, and if they occur in this environment, you're going to get the same kind of response that you got over here. People were obviously super bullish here and pumped the price up, and they decided to sell in the retrace, and then there was a black swan. Even though all this happened here, when the black swan event happened, the price still crashed. Yes, we got 100% pump. The fundamentals are as strong as can be. The bullish news is, there's more news reasons for the price to pump than there's ever been in Bitcoin history. The fundamentals have never been more stronger and accepted on a large scale than they are today. And the price is not reflecting it. Which means it's either priced in or it is waiting to be priced in, or it will be priced in. That price rise, that price action, that pump, that the big bull run that everybody's waiting to happen, myself included, will come. But we have to be honest about it. So let's look at it just for the local today. What can we expect in the upcoming days? We're on the weekly. Let's go back to our 4-hour. So we've came back down. We took the liquidity below the low. Our trend has broken above, broken below and above our previous price action, our previous consolidation. This here would be considered, an outside bar on a weekly chart. It's got a low below, it's got a high above, oftentimes found as a reversal signal. Let's look at the price action of this trend. And again, I'm on a log scale, looking at the change in percentage versus time. The amount that price is increasing over time is slowing. That's why you're getting this curvature. It happens at a controlled rate. It's slowing over time. That is telling you that the trend is exhausting itself. And when time and price are square, when supply and demand are balanced at this flat area here, the trend will change. Maybe it changes to the upside. Maybe it changes to the downside. What do we have to indicate possibly to the downside? Well, if we look at our momentum here, we can see that here was the past oscillation that we looked at, and the thought and feeling was that it exhausted too quickly, and we were looking for a price pump in this rise in momentum. Well, we got it, but it died off really fast, and then what were we looking for? Another push to the downside. Well, we got it. And what is happening again? So here, momentum, we would expect this to roll over to the upside. Here's the top of the previous momentum cycle. I think it's actually going a little farther than that. I think the true momentum is this, right here. And I'm expecting this to culminate in this area with a true bottom. A true local bottom anyways. This is a temporary local bottom. To me, maybe it holds, maybe it don't. But what do I see here? I see, I'm just going to delete everything on the chart. I see the price action is rounding over. It's losing momentum. you know, and when time and price are square, the trend will change. It's square right now. I see divergence on the momentum. These here, this is a lower high, or at best a equal high. And what do we have on the price? We have divergence. Bearish. We have the 200 EMA that it has rejected off of with a double top. Bearish. We have the money flow about ready to cross into the green. It's right at the zero line. What usually happens here? You get one more, quick, hard rejection. And then you get divergence on the downside. Price puts in a lower low and a higher low on the oscillator, on the momentum. Because as the price drops, people decide that they don't want to sell anymore. It's dropped too much already, or maybe they've already sold as much as they wanted to sell, and new people are saying, hey, this is my opportunity to jump in. But the only bullish supportive thing I see is I see a slight increase in volume right here, but this push started right here, and it pushed upward. What has the volume been doing since then? Is it higher than it was over here? Is it? Yes. These here, here's the average volume here. Here's the average volume over here. Most of these are way lower. So, I mean, there is an increase in volume on this move right here. That is true. But since it has begun increasing, this volume is decreasing. It's trending downward. You can see it in the price action. You can see it in the momentum. So now let's look at this downward momentum cycle. You would expect something like this. So currently, I am adding to a short position at this price level gladly, because there is just, we've only done a 33% retrace, which is, a time to evaluate, should we expect a reversal to the upside? Well, we've only seen 15% down since our break of a macro trend. The average is 50%. In price reduction, and if we look at it, we've retraced 50% of the trend, but we have not dropped 50% in value. We've really, since the break of trend, we've only dropped 15% in value. The average is 50 to 80. So, I'm a little reluctant to believe that this downtrend will end with only 15% price drop. Can it? Certainly. We are at a known support level, trending sideways here. Does the high time frame momentum indicate that we should be looking for a reversal? It's getting there, but not quite there. So, if we trend sideways and hold here for longer, well, then it will get there. And it will most likely rotate to the upside. But thus far, we just keep bouncing around and putting in a lower high. Well, should we assume that this swing is over? I'm going to say yes, because the price action is rounding over. It is exhausting. The volume is decreasing. We have divergence on our RSIs, and momentum. You can see the amount of momentum coming into the market is ever since this low is increasing, while price has made some headway, but the momentum is rounding over and exhausting. You can see that it's building to the downside, right here. So I mean, I am looking for a reversal in this area. And now, being that I do believe we are in a macro downtrend, I'm expecting a significant price drop in the small amount of time, and then as the momentum cycle rolls over to the upside, a push to the upside. And whether or not I continue to hold short for lower prices will depend on when we get, if we break out here, well, then it's time to have a change of mind, a change of opinion. And the only arguments left then is a large upper right shoulder, or we continue on to higher prices. If we reject here, well, then we should be respecting or expecting a rally and watching that rally, just like here. I expected price to stall out here and temporarily took a long position that I closed up here. And I added to my short position from up here, about 29.5. And that short has been active since July 1st. For the same reason. Momentum and price rolling over. It's showing exhaustion. It was at a known resistance level. There was divergence on high time frames. That's the indicators available. But when do I need to have a change of mind? Well, when the trend shows a reason to change. When should I be looking for it? Right here. So I mean, this is a take profit level. Well, I took that profit. Price came back up and rejected hard. I added to my short position here because as this momentum pushed upward, it hit this trend line and rejected. I'm adding to my short position here. Why? Because this price action is rounding over. It's showing signs of weakness, exhaustion. We have not broken our current downtrend, which is, kind of right here. And if we just delete all of these silly marker lines, I mean, our momentum is rolling over. We're at the 200 EMA. We have divergence on the momentum indicator. We've put in a lower low. We appear to be putting in a lower high, rejecting at the 200 EMA. This uptrend that has started to the upside has broken. You are now in the sideways portion of it. Here's your uptrend. It being the trend is exhausted. And time versus price is slowing. It's diminishing. How far it's increasing in price over time. Volume is decreasing as price moves to the upside, so the trend rolls over sideways. You broke the trend, you've retested the trend, and now once we put in a lower low, this will be a confirmed local downtrend complementing a midterm downtrend and complementing a macro downtrend. So now let's talk, where should our next area of interest be if this does reject? And I mean, interest to the upside is simple. I mean, if we get a breakout, we'll probably stop at, up in here. I mean, what, 28.5, 28.7 at our past level, maybe get up in here, I mean, if this manages to break out, and then we'll probably see some kind of a pullback to test this lower price action. Well, then change your mind. And consider either, am I going to build a short in this large upper right shoulder, or am I going to assume we're going to get more upward price action? Currently, I think it warrants some more downward action, and so the first thing I want to do is I want to take this price range that we've developed, the range that Bitcoin has chose to trade in, and I want to expand this range to the downside. We want to double it, split it up into equal proportions. Let's throw a 2 on there. Okay, so if this range was to expand and double to the downside, just like this range did, if it was to expand to the upside, you know, I don't know, here's one, two, I mean, let's just grab our box and look at it. You don't have to believe the words of my mouth. It's the content of my speech that has any value. Let's move it up here. What do we get? 1 3/4, almost a full 2. If we looked at this right here, and if we were to take this whole entire move, top to bottom, 50% of it is about right here. You see price breaking into it, rejecting, coming down, retesting it, and coming up. Let's take this to this 50% mark, and now let's double it. So where does it come out? Right there. I mean, here's your highs. Price tends to move in equal increments. That's why your average true range works. So if we take this here and we were to double this range down, in percentage wise, it's bringing us all the way down here. Where would 1.5 ranges be? Right here, 1.5. Well, percentage wise, using our fib tool, the 1.5 to 1.68 expansion is also right in this area of 23. I'm going to say 23,250 to 23,500. It would be a 1.5 to 1.68 expansion. Is there anything else that's going on here? Well, we see this 200 EMA rolled over here. It was support right here, this little area here. It was the POC here. It was support resistance flip right here. Right now we're at our current, last support level. So if we can come down and flip that into resistance, this was our last support flipped into resistance level. We're down to retest it now. That's where price was drawn to when it broke trend. If we, break to the downside, we would be looking for, our last support to resistance level. So, I see a stop in this area of 23, I'm going to say 250 to 23,500 area. 50% of our current true range. I've already got a line there, which comes out actually at 23,750. So I'm going to change my mind and say 23,250 to 23,750. Somewhere in this area, we should be expecting a break of trend if we dump and come up and retest this macro support. Here it was support. It was support repeatedly through, right here. We can just snap a line at about 25K. So this right here, price come down and retest it. What happened up here? Here's your true range right here. Here's 50% of the range, and you can see it's resistance, it's support, and what happened? Let's take it down. Oh, wow. It doubled, it flickered into the range below, but every time it's popped right back up. It moved 2 1/4 ranges. 1.5 is conservative. So if we consider this whole upper price range, and now let's drag it down. What is this? This is a quarter of the range. What if we make it all the way down to the 1.618? That's, here we took this range up here, this current price range, here's the high, here's the low. We expanded it by 1.5 to 1.618, and in percentage wise, being we're on a log scale, we're representing it with this rectangle. There's the high. Let's get this actually on the low. There's the low. Let's bring her down. Now it matches. So, I mean, if we come down to the 786, what would that be? That would be 3/4 of this range. If we came down to the 1.25 or the 1.236 or 382 or whatever dumb number people want to use, that is a quarter expansion of the range to the down. That's a 25% expansion of the range to the downside. Typically, it's 1.5, comes back and retests, and then continues to the bottom, or only 3/4, or it breaks out and retests and continues. So my target currently to the downside, I see a gap here, a very low, volume area in this little pump here. This 1.618 is coming out at a past support resistance level, past point of control right here. What do we got to the left here? Even more, I mean, you see this here is the support resistance flip level right there. I mean, my current target to the downside is going to be this 23,250 to 750, and then we'll see. I expect more continuation to the downside, at least to 22,000. The target that I have in the back of my mind that really upsets people is $8,000 to $12,000. With being open to the possibility that on a super mega macro, the fact that we have a mega double top and all kinds of reasons. I mean, Bitcoin could always put in a lower low. It's only been 3 years since Bitcoin was worth $3,000. And what would happen if Bitcoin went back to $3,000? It would entice everybody and their brother to buy. And nobody and their brother would be willing to sell at $3,000. I mean, it's gone down so far, how could it possibly go down anymore? Why would I sell? And man, I gotta buy Bitcoin, dude. Look at, I mean, it's never been, I can't believe it. It could never happen. That is what changes the macro trend. When the never could happen happens, flushes everybody out and entices everybody else to come in. I mean, I'm open to $3,000 Bitcoin, but that's not what I'm looking for. I'm looking for price to come down. I'm looking for the momentum cycle to rotate to the upside, somewhere in this little area, time-wise, here. We get a capitulation down and, play around and then come down. And if we look at our current price action, I mean, we can just draw a simple curve at when would the trend change? When time and price are square, when the momentum when this hits max peak to the downside, that's when people stop selling and start buying. Just like to the upside. This is when people stop buying and start selling. So, and as this happens, what you're going to see is you're going to see the price action begin to round over to the upside. Maybe it happens here, like something like this. Maybe this happens. Maybe we keep trending sideways and it goes up. Maybe we see something like this. Maybe this curvature doesn't even begin and price just keeps going down. But it's each step of the way in the liquidity cycle, which is easily represented by the RSI's, the average momentum of the price action. Time versus price. It's not even time versus price. It's time versus change in value, which is represented by the percentage of change in value. Hence the reason for a log scale. This is showing us the visual representation of change in percentage of value. When should I expect the trend to change? When time and price are square. When the momentum is either at its maximum and then breaks out. When the momentum is at its minimum and breaks out. There's an argument to be made that this curve is really already, a occurred and we are breaking out. That argument could be made. I don't think that's the case, and there's no way to know that's the case. There's just only things that we can do and look at that are indications, and those indications don't exist, and it's rational to assume that we will continue to the downside. So here's my price target level currently is to reject off this 200 EMA with a lower high and a lower low, lower high, which, I mean, we haven't really put in a lower low here yet, which will, when we do, will confirm the mega macro trend that broke. I mean, here's our lows coming up here. The mega macro trend here broke right here. We capitulated down. Has this downtrend even been truly officially confirmed? Well, we have a lower high, but do we have a lower low? We do not. We'd have to come down, grab the liquidity below the low, break up here, and start putting in higher highs and higher lows. Well, I'm more of the camp that what is more likely to happen is we put in another lower low, retest this level, and continue down. And when this downtrend ends, nobody knows. Nobody has the ability to know. All we can do is look at the momentum and the indications in the price action in the buying and selling. This price chart is the final culmination of all buying and selling decisions. Why people chose to buy, why people chose not to buy, how much they chose to buy, how much they chose not to buy or sell, or what they were able to buy and able to sell is all reflected in the time versus price change of value, and you can use those things as indications as to when and where you can expect some kind of reversal. So as price comes down here, if it does, it's a big if. I'm looking at this retracement, and I'm going to be looking at the strength of the move to the upside. Here's the strength of the move to the upside. It lost strength with lower highs and lower lows. So when we come down here and we start to build some momentum to the upside, I'm going to be looking for the strength of the move to say, okay, should I expect a continuation to the upside of some seriousness, or is the momentum going to come up and get really weak with lower highs and lower lows? If it does, I'm going to expect another drop to the downside. Then I'm going to look at this. I'm going to look at the momentum. What is the price chart? What is actually happening to the price as a result of the liquidity and the open interest and momentum available to actually push are any of those things actually able to push the price up? And why can it push the price up? Because there is still larger players that are up here absorbing the buy pressure, constantly, moving their sell orders down and down and down and down until they just don't want to sell anymore. And we have no way of knowing when that's done until it actually stops. And when it stops, well, then it's reflected in the price chart. Now as momentum builds, there's new open interest coming into the market to the long side. There's less open interest to the downside. Less people want to sell because they're confident the price is going to go up. Why are they confident the price is going to go up? Because the price went down. People stopped selling. People started buying. This is supply versus demand. When supply and demand are equal, time and price will be square, and the trend will change. And when, at whatever point, I know people have price targets in mind and all that baloney. Those should be just areas of interest, but the reality of it is when time and price are square, supply and demand have become equal. why it's equal, the fundamentals, X, Y, and Z. Does it really matter? No, it doesn't. Well, I hope it was a help and a blessing to you. If you find value in this content, if you like the way that I view the market, we're not in this to make the big money. We're not selling some garbage. I mean, maybe someday we'll make a course or something or whatever. That's not today. If you support the content, I'm not into making long-winded videos on a regular basis, high production content, X, Y, and Z, filled with all kinds of garbage to barter sponsors or whatever. This is to disseminate information that a person just simply believes will be a help and a blessing to your ability to effectively weed through the waters of these financial markets and make decisions that are not based off of paid advertisements. Or you just don't want to piss off your viewers because you're going to lose ad revenue by telling them something that they might not like. Those types of environments are not in your best interest, and I strongly suggest not even consuming it, and just getting yoked up with individuals who have one goal in mind, and that is to do the best possible that they can based off of what reality actually presents in front of us. So, with that said, trade well. And if you support the content, join us on Discord, invite your friends. We'd be glad to have you.